Investors. The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Hi, folks. Basil Chapman singing for the Vacationing Tom O'Brien. My pleasure to be here. Usually my show is the 11 o'clock till noon hour, the Tiger Technicians hour. So this is a pleasure to be sitting in for Tom in the Money Masters show. So let's look at this. The S&P mini futures up 20 at 2059. Yesterday was a whopping down day. Now we've seen that this is the pattern. Let me just go to this chart right here. This is the pattern that I show my subscribers every day. The pattern has been that these very strong down candles very often don't go more than one day. And the very next day, there's a very strong up bar. Look at how many times it's done that. I've circled many of them. Not all of them, but many of them. And that's exactly what happened with yesterday's candle. However, what's really important about this is that the overarching arch that we've been looking at for so long with basically lower highs and lower lows is continuing to unfold. And that suggests by later this month, we should be testing the low 17,000s. So that all these rallies are really rallies within the framework of a deeper tidal change, a change that says that instead of going to high tide, which we had been going to, that trend changed. Basically, it changed back in March when the Dow made its 18,288 high. Then we went sideways with just a nominal new high at 18,351.36 on the 19th of May. But basically, we've gone sideways, and now we're starting to break key support of the 17,579 level. Now we're starting to test the 17,500. So for my subscribers, it was really important that we stay in the short position. We took some profits, some really nice profits, and we raised the stop on a couple of things, and we didn't raise the stop on others because we are expecting that there's going to be further deterioration. This is just mere a Band-Aid that was put on, and the Band-Aid didn't quite fit for China, because I think that China is going to, we can do that right now. Let's go to the FXI. Right here, we'll do FXI. There are different Chinese markets. This is the FX. Oops, I didn't mean to do that. Let me just put that back again. Not sure why it doesn't change. Okay, there you go. Click FXI. See, the FXI has had a beautiful gap to the upside, an island reversal, but the technicals, the stochastic still at 11%. The MACD is not really good. I think that the FXI at 41.27 up 231 after hitting yesterday's low of 38.88, which was just a tad lower than the 39.78 200-period exponential moving average. Remember, we were looking at that the other day. Is suggesting that the monthly tide is decidedly down. The weekly tide, it's more like a tsunami, and the daily has got the waterfall cascade. It's not the Niagara, it's that incredible waterfall down in South America somewhere, things in Argentine. And look at that, waterfall cascade. So you've gone from 52.85 down to the 38s. You've got to see a bounce, and this bounce is a mechanical bounce. It's really one that was forced upon the government because they try to do something, but they don't have the experience of the American government of so many crashes over the years, or massive market declines that they kind of. You remember when Robert Rubin used to shove dollars there, and you would see the market turn intraday, and you could just feel that millions and millions of dollars worth of buying of equities was there as they. I wouldn't use the word manipulated. I just used the word manipulated the market. Save the day, let's put it that way. So the FXI, the day's been saved, but maybe not the week. We'll see whether it can hold between 43 and 44. That's a tremendous resistance. And then I think it starts to arch over. The pattern I spoke about yesterday is the Chapman wave, lowercase h. Look for it. You're going to see it all over for the next month or two. It's the H pattern where you come down sharply, have a bounce, and then fade at a peak A or a peak B minus as it comes back and takes out the left side low bar. looks just like a lowercase h. Or you can start to make a series of them that makes a lowercase m. Now, a question, the FXI weekly question from the other day, change of slope higher, does it portend a right arm extension? The right arm extension has already, this is exactly right. This is a right arm extension in the weekly chart as it ran higher with one of the technicals confirming, usually it's the MACD, that's exactly the case here. As the slow stochastic, you can see this middle chart was starting to decline. Correct. If that's what you're talking about, that's the answer. So now let me just run the numbers. The Dow is only up 176 now, having gone up to over 220 before. It's at 17,691. One of the reasons why I didn't want subscribers to completely get out and take profits is you want to reward yourself for getting things right, but at the same time, you want to stay. I've got Larry Pesavento on the line. Larry, how are you?
Hey, Basil, how are you?
I'm well. I really enjoyed your show. Terrific show. Thank you.
George, yours. The only reason I'm calling you is I'm going to have a special guest on tomorrow, Bill Meridian from Cycles Research in Austria. He's got one of those IQs, up with the triple digits, So he's a really smart dude. And he has showed me some of the most interesting things I've seen about cyber attacks. You have to watch the show tomorrow.
Okay, that's your show tomorrow at 9 o'clock in the morning, Friday.
He's going to be on at 9:30,
and he will be on at 9:30 Eastern time. Fabulous. Yeah. So Meridian, so you've quoted him many times. Well, periodically you've quoted him.
Oh yeah.
Over the years.
Yeah, he's a game theorist. He was building these games for. These computer games and stuff, that these people are using for wars.
Yes.
He studied history, and he's done, World War II, the Civil War, all these things, Napoleonic Wars and stuff, and he's made games into those, and he's sold those. So he's had that as a side business, as a hobby that turned out to be a really big thing. But his main thing, of course, is the market. But he has some information on cyber attacks that I absolutely will blow everyone away. You can't miss this. He's going to be really good.
You've more than whetted the appetite. This sounds fantastic.
I know you got. We have a lot of stuff about the markets and stuff, and this is related to that because what happened to the stock exchange, I frankly don't believe him. I think it was probably something more of a cyber-related thing, but they don't want to scare anybody. That's just my guess. But I'm paranoid, and paranoid people only have to be right once to be correct. So
to reinforce the paranoid, correct.
Anyway, I hope the folks can listen in tomorrow because it should be a great show.
Oh, thank you so much for telling us about that. Yes, whenever you have your guests on, it's always fascinating because the guests that you have come to the market with years and years of experience, but stuff that many of us are not that familiar with. So it's really nice to hear another perspective.
Yeah, it's called weird. Okay, thanks a lot, Basil. You have a good show.
Thank you so much. Thank you for calling, Larry. Always appreciate that. Larry Pesavento, folks. And so Larry has a show at 9 o'clock every day. And Trade What You See. And Larry, of course, is a wonderful technician, written many, many books. And he's the master of the Gartney and the butterfly techniques where you look at, I basically either call them triangles because that's what they are, but they coincide. When you have a robust system, it invariably fits in with other techniques. And what I've found is when I have the arch technique that I look at, or the cup formation, very often it very much coincides with what Larry has drawn as part of the sequence that he looks at, those Gartneys and butterfly, those triangles, and at the same time, of course, he's an expert in using Fibonacci. So this should be a really interesting show. So thank you for calling, Larry. Always appreciate that. So let me just go through this again. So the FXI, this is just a balance. It's in a very serious decline right now. To be able to get out of it, not until it breaks 48.50 to 49.30 on a closing basis, can I even consider that there's going to be a chance of trying to get back towards the highs. I think that this is something that's going to take quite a few months to resolve. So that's the FXI. I'll also do the DJ. This is the way I get the Shanghai market. It's the same chart pattern, just different numbers, and it's got a very nice candle. Now, this is a very interesting candle. If by the end of the day, oh, they must be closed by now, 6 hours, 4, I wouldn't be surprised if they closed. But if this candle came in with a high today that was much higher than it is today, in other words, this particular index had a low today of 436.30. If, in fact, the intraday high was 505, that candle would be an extremely bullish candle. And I'll show you why. Look at this. This is the Dow, INDU, from the 2009 low. Look at this candle right here. That candle, which was seen in the monthly chart, many charts in October of 2011, after we had made peak Ds and most of the charts that we look at, the monthly charts in the Chapman wave, that candle produced, in fact, that candle is ongoing right through until 2 months ago for the Dow, where we turned at 18,351, and we'll see if there's going to be a reversal of consequence here. But that's how powerful that candle can be. It's an overwhelming candle. It's not just an engulfing, it is an overwhelming candle. This one hasn't done it. So the dollar sign DJSH, the Shanghai market, that candle would have been extreme. So this candle right now is just a bounce. And if you look at the stochastic, it's at 8.14%. That is really pathetic. It did cross positive, and the stochastic has to go above 20% with a very strong move in the candle you're following of whatever it is. And that would take it to 512. If it does that with the MACD rallying, I don't know if it's going to have the opportunity to do that. So this is Basil Chapman. The Dow's up 171, S&P's up 20, and I'll come right back and run the numbers as soon as I get back here doing the Tom O'Brien Show. Money Masters. I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're looking at the Dow Jones Shanghai Index or Fund, and that one shows that the 9-period moving average in the 120-minute chart has been surpassed, and that's twice now, and that's kind of important. And I really do think that this is a balance, and this balance should take it to between 500 and 502. Well, 491 is the 200-period exponential moving average in the daily chart. 504 would be next. So you can make a comparable because it's at 480 right now, up 28.29, up 6%. I'm not sure it's going to be able to go much more than another 3-4%, and then it will start to arch over. So I'm going to draw in the pattern that I would be expecting. I'm drawing it in a little bit big here because just to give it a room. So that'll be 1 day, 2 days, 3 days. Yeah, I think by Tuesday of next week, it starts to head down again. So I'm just going to draw it like that. That's the pattern I'd be looking at. It's very positive if it makes a V-shaped pattern, and by Monday afternoon, it's already above 512, the 9-period exponential moving average, then I'm going to say, hey, the bar of the 6th of 528. So whichever Shanghai chart you're looking at is the high of the 6th of July. That's the high that would be the next level of resistance if it's able to break above this 9-period exponential moving average. And the only other thing I wanted to say is if you look at the Nikkei, which also came down very sharply, very much like us yesterday, having a big bounce, it is making a potential peak F in the weekly chart of the continuous contract. This is serious stuff, folks, because the low that was made intraday today, look at the way the candle is. This is a Chapman wave Roman candle. We need tomorrow at 4 o'clock to really know where it's going to close. I can just tell you that if it closes anywhere between here and maybe just a tad higher on Friday, and then the next week at any point, any day, it trades in the 19.633. This is the continuous contract. The Nikkei is going to retest the lows. So this is a very important a moment. Why? Because you've got a base that says, yeah, you can be thinking arch formation, but wait a minute, what about the rectangle that's formed that says, until you pierce the left side low of the 8th of May, the week of the 8th at 19,130, decisively on a closing basis, you can just keep bouncing around like the Dow did in this chart right here. Just keep bouncing around within a trading range. So, but I think that the Nikkei is vulnerable at this particular point. Now we've got to do a couple of things. I said I'll go through the indices. Let's just do this again. We'll do it live. So this is the Indu. This is the Dow chart that shows the resistance and it's pulling back from the resistance. Remember, so for my subscribers to my opening call, we've been short via the Dow, via instruments, different instruments. We short other areas, different sectors, and we've taken a little profit here and there. We were short the VIX. We took some profit. We still got a position in the we were long the VIX. We're still long the VIX. we took some profit. So I'm looking at this, and I'm not sure we've got it, but I did have one position to buy as a long. We still needs to make Chapman Wave leg D, I believe. So that's the way it is there. Now, I would like to go through these one at a time. The Dow needs to hold. If it closes, the Dow closes today under plus 100, that'll just be a horrible, horrible action. I'm thinking that there's just enough room between Friday and maybe even Monday to go higher this week into next week, and then we've got to be really careful. The big resistance is 17,885 in the 9-period moving average of the weekly chart. That area, a break above it means I have to rethink the idea of lower lows and lower highs rather than the sideways consolidation continuing. Okay, so that's the Dow. And going to the S&P, SPX.X, look, the S&P right now up 16. It was way up 22. It was at 2074, and it's trading at 2063 right now. I mean, this is not good. This is just not good. And the weekly chart says it might not be good on a daily basis, but the weekly chart is terrible. Look, the MACD and the stochastic are failing. And the upside to me is just really limited. Okay, now a couple of things that I want you to do. Let's go back to, so we've got the QQQ series, stopped at resistance at 107.65. That's the resistance. It just missed getting there, went to 107.60, and now it's at the low of the day. Oh, man, I tell you, this is just a horrible market. The IWM, the Russell 2000 ETF, IWM, right here, couldn't even get close to 124.10, the 9-period exponential moving average. It's at 122.78, way off the high today. And there's that weekly chart, just like all the others. That weekly chart is suggesting the technicals are failing and that it'll be very unusual to continue this. You know, the monthly charts, look at this. In the monthly charts, the technicals have been failing for a year in the IWM as the price went higher. That is not a good sign. So don't tell me we've got a break now. We've got a break and I haven't finished doing the numbers. We've got gold. What did I say gold was? Gold is unchanged at 1163. We've got bonds. What are bonds? The TLT is down 1.18. I'll talk about that as soon as we get back. And I do want to do a little work on gold. Basil Chapman sitting for Tom O'Brien. I'll be right back.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we were looking at IWM, and then we went on to gold, the GC. So here's the contract. Not a bad candle, just as candles go, but look how the 9-period moving average at 1167 is trying to repel the price. And then the weekly chart, you've got the series of arch formations. Best case is that the dollar, so now you get the relationship. See, daily, weekly, monthly. I've got the 120-minute chart here, which is at A, B, C, and very strong resistance at 1171. Must hold 1155, 1150 support, no matter what happens. That's just really important right now. That is if it's to rally. Now, if it's to rally, it would imply that the dollar is coming under pressure after peak E in the Chapman wave, but the stochastic's at 83%. That's good. And the MACD is still very strong. And look at the histogram, these from the 0% line right there, that horizontal line. Look at the green bars going up. Let me see if you can see. Yeah, you can see that nicely. So, and look at the cup formation that's trying to form. My suspicion is that at worst, the dollar will make another lowercase h, which forms that M pattern, and that at some point later in July, maybe August, it actually takes out the 90. It takes out the 95 to 94 support and test 93.13. That's going to be really important. If there is a weakness, and within 3 days is trading under 95.50, that would be my guess. But if it just goes sideways and keeps holding, and actually has a spike tomorrow, instead of breaking down, it has a spike to the 96.80s. It's at 96.33 right now. Then all of a sudden, you've got the pattern that says the lowercase h can form a cup formation that, if it breaks the previous high of the arch peak, that's 97.78, could very well go back to retest for a double top, the 100.39 level. That's the way I'm looking at it. Think of it as the lowercase h, except in this case, you've got yourself a Y, inverted Y, not an upside down, but an inverted Y. All right? Think of it that way. Good. Okay. So now what I want to do is I want to spend a little time on looking at the silver. I want to do this in relation to gold. Now, look, it's taken 2 sessions and has tried to fill in that very ugly Tuesday gap down. The SLV, which is the question I've been having from people for a little while, should we trade the SLV? Now, my rule of thumb is that the iShares of the silver index is a much clearer one. 1464 was the low back in November. 1463 was the low in March of this year. And then this week, we've taken out those lows and gone to 1403. My rule of thumb is in the arch formation, the bar that takes out the left side low should also be the bar that either closes back above the left side key support, in this case 1463, but it cannot do that later than 1 week after that. So you've got two bars, the bar that takes out the left side low or the next bar. You've got to climb strongly away from the support of 1463. Can't be resistance, it has to be support. And you have to tackle the left side high bar of consequence. In this case, it could be the high of the 19th, the weekly chart of the 19th of June at 1570, or close above like a moving average, which is usually the 9 EMA, which is at 1529. Make it as simple as that. Is this the opportunity now to take a little bit in gold, the GLD or the SLV? Let me show you the GLD. It has not broken that support. And it's interesting because it's produced the same pattern. Look there. Look at that pattern. Doesn't this look familiar? You remember I was drawing this pattern yesterday? Look. Patterns repeat over and over. It's a fractal of human emotion. So they get repeated whatever time frame. Remember this chart? I hope this is the chart. Am I going to find it? Oh, this wasn't the chart. Okay, this is the 10-minute chart of the E-minis. Yes, this is exactly the chart, except I drew it on a different one. You see this trend line support right here? That support, that rising trend line, the higher lows is really important. And look what happened to the E-mini. Look at this left side, right side price time match, which went right to there. So it missed it by 2 bars of hitting the high of the 10-minute chart of the E-minis at 7:20 in the morning on the 8th. 2063.75 was the high. And there's the plumb line that I chose, and this is the level. And that is the resistance that I drew in a while back. There it is. I drew it back over there. And look, that resistance is still the resistance. And the E-minis went all the way to 2068 and then pulled back. And this is without any technicals. I've only added these there's no MACD stochastic or 9-period moving average. But there are trend lines that I've drawn in to show you how important it is to be able to identify the trend lines. So let's go back. So the rising trend line here on the GLD says that right there, 109.96 is a very important support. If the GLD breaks that support level, it's liable to tackle the left side low of 109.77, and then that was in March. And then November of last year, 109.67, just fractionally higher, but it's a rising trend line. And so far, it's been good. So now what I'm saying is, this is of all the times to be able to experiment a little bit with a little bit of money to see about a technique that might work, about the chance that you've got your mirror image. I was thinking, should I introduce that? Yeah, why not? This is the TFNN. We're all about techniques. This is mirror image. This is the DOG, 100% short, the ProShares Trust short Dow 30, and this is the diamonds, which trades the Dow. It's the vehicle for the index for the Dow. And look, pretty much a mirror image, right? Sometimes the prices are a little bit bigger, but the actual trends of all the changes match exactly. So you can use gold and the dollar occasionally. Most of the year you can. There are some periods of the year where gold and dollar actually go together, but most of the time you can use that. So if ever there was just the opportunity to say, you know what, I'm not this is me talking. I'm not a fan of gold at all yet. I'm waiting for those signs and all those little shops that say gold bought and sold here. I want to see the sign saying for rent. And at that point, I'll be really interested in gold, very interested in gold. Until then, kind of on the side, being very negative about gold. All these rallies I've been call them suspect. But if this was ever a chance to get a little bit of a gain in either the SLV or the GLD, if you want to just take a little nibble right here, personally, I would rather wait for a rally to be able to say, hey, is this the time now to short gold? Is the dollar going to go higher? I'd rather not do anything and just wait and have patience. But the questions come up all the time, and the answer to you is, yeah, if you want to do something, this is the opportunity, but tell you the truth, I personally wouldn't touch it on the long side or the short side right now, but my preference is on any bounce to 113 in the GLD, somewhere around there. If it starts to roll over, my guess is that I might even tell subscribers to short gold with various techniques. So I wanted to spend a little time on that because I get so many questions about it. I had a question about, okay, I want to look at the bonds. See, now this is very interesting. You see this chart that I drew of this bowl formation in the U.S. Treasury bond continuous contract? See the dashed line, the Chapman wave inside wedge, pink dashed resistance line? Well, it says that if bonds are going to rally, they should try for the high of a 155 to 156 by the 15th of July. So that, if I'm correct, that's probably about Tuesday or Wednesday of next week. Well, we'll see what happens, because I'm still saying that the Japanization of our bond yields is it's an ongoing theme. I don't see anything yet to change that. The other thing is that declining wedge in the weekly chart of bonds saw the spike to the upside, and these spikes very often create this kind of pattern, the H pattern. So closing above 156 negates that, starts a whole new pattern that says, whoa, you must be thinking V shape or a cup shape, because I'm going higher to the 158s. And that's the way I'm looking at it. The monthly chart gave a peak E sell signal that went to a sell mode, but we've pretty much used up time rather than price, and it makes the support at 145, it's trading at 152.5 right now, 145 absolutely key. You break down in that to the 145 area, and then the triple yield chart that I always show will have the weekly chart of the TYX, the 30-year T-bond yield, start to break out above E, and that'll be something unusual, and that'll actually be a very big positive for higher rates. So, okay, wanted to cover those things. I had a question about Facebook. Facebook right now, doing okay. I just think it's doing okay. If you're long, I'd say just keep long. I would lighten up. If it closed below 84.50, it's at 86.94 right now per $1.29. The reason why is that if you look at the pattern in the 120-minute chart, it's really struggling to make a cup formation towards getting towards the 88. What was that high? 89.40 high of the 25th of June. And my suspicion is that it's making a high-level consolidation, and that the weekly will make a right shoulder failure, as will the daily, and then it'll start to come down. So if you're long, I don't want to change your position at all. All I want to say is be real careful. I personally would take something off if it closed under 85. Let's call it 85.20. I'd start looking at maybe taking a little bit off rather than putting it back. Just wanted to mention that. So the other question I had was CH. Is it too early to buy CH? This is the Aberdeen Chile Fund Inc. Interesting, Aberdeen. I need to look at this stock called FAX. We'll look at it in a moment. So I said it's just too dangerous. I see no signs yet of the price. How can I put it? Every bit of strength in the technicals has failed to produce a decent rally above the 9-period moving average in the daily. Weekly, you're not even close at 6.80 right now, 12 cents. It is even close to the 716 level. So I'm going to say I would pass on that. I don't think, unlike gold, where there's, because of the mirror image of the dollar and gold, I'm saying now you've got at least a chance that if the dollar pulls back, you can have a bit of a bounce in gold. I don't see anything for Chile right now. So I'm going to say I'm the wrong person to ask about this, because look at this monthly chart. It went to a peak D from the low that was made in October of 2008 at 6.31. It went all the way to 24. What was that? No, that was 25.76 in November of 2010. It's taken time to come down. You see where it is? You see this low here of 6.31? That was the 10-year or 8-year low that it made, 6.31, right? How many years? I don't want to talk out of turn. Anyway, the multi-year low. Well, the low so far this month has been 6.57. It's almost about to take it out. I would not touch this yet. My suspicion is it will take it out, and then it'll try to rally. And it's that rally, that next rally that I would say maybe I'd consider it as a trade. But to tell you the truth, there are way better things coming off a bottom than this. I don't think this is a bottom. So chilly, no. In fact, it's the summer. Why would you want to get chilly in the middle of the summer? Okay. Now let's look at a couple of other things. The VIX index. This is really interesting. Look, the VIX is up from the low of the day. It is down $1.25 at 1841. With this kind of market, day is young. Anything can happen. I would have thought that the VIX right now would be at 1690 to 1670. This is saying people are buying this. They don't believe this rally. So we're going to watch this very closely because there's a kind of a double top here at that peak E that was made at 1980. Let me just type in 1980 here, 19.80. And it hasn't been pierced. And yet the weekly chart is suggesting technically and in every way that this turn down in the market is being met with buyers of the volatility index. So I'm going to be watching it, and we know from previous Thursdays that the VIX is looking very strong, and by Friday's close, whoosh, it pulls back and goes underneath the 200-period moving average. Last week was the first time it closed above the 9-period moving average since way back in 9-period moving average, right there, way back in February, the week of the 6th of February. So if it does that, if it closes above 16.32, that's good. I don't think that's good enough for me. I want it to close above 1650 no, I don't even want that. I want it to close above $17 on a weekly basis. And then I'll say, hey, now we're starting to see some strength, some buying of the volatility index, which suggests selling of the market. All right, so we've gone through that. And let me run these down. IYT. I wrote down some stocks that I want to look at. The IYT still couldn't get above the 9-period exponential moving average. The iShares of the transportation index, it's at 145.06, up $1.70. Wow, it went all the way. It's gone from 167 down to 142. That's a 25. That's a 20%. That's a huge decline in this particular index. I think it's telling us something. Basil Chapman sitting in for Tom O'Brien. This is the Money Masters show, and I'll be back straight after these important messages. Dow's up 155 on this 9th day of July.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hi, folks, so we're back. I want you to do a couple of things here just in the remaining time that we have. So this is the 10-minute with the technicals. See how it held that 200-period exponential moving average. And this is the E-mini. Let me see if I've got it right here. Yep, there it is. That's the E-mini without the technicals. So this is what I'm looking at here for you. If you're trading the E-minis have just made a kind of a sine wave move to the upside from the base of 2062, let's call it, all the way up to what was the high, 2068, then down right there to the base of 2053s. I'm looking at this and I'm saying, okay, if there is a rally at this particular point, what's really critical is that the 260 level is taken out and needs to be taken out quite soon. I would say, 11 o'clock Eastern time? Needs to be taken out by 11:15. And if it's taken out by 11:50, that very strong gray diagonal line, horizontal line that goes to 2063 70s, let's call it the 2063s, that is the level to pierce. And if you do pierce that, you will be able to tackle that 2068 level. My suspicion, because of the sideways move that we're looking at, is that we're probably looking at a move that says I can get to the 261-ish area, but I might start to stall, and I've got to be real careful that there isn't a lowercase h that forms by coming back, and that's going to be very important. So the two patterns to watch. It's a V-shaped pattern. I don't yet have a left side, right side price time match. It's used up a little bit too much time to do that, but I will have a V-shaped pattern if in the next within the next 8 minutes the 2062 level is hit. If it just gets to 260, 261, starts to go sideways and then breaks to 258, that's the H pattern. So you don't need all the technicals. Now, how would that confirm with the technicals here? Yeah. Look, the MACD is just trying to turn around with the E-mini 10-minute chart with the technicals. The stochastic has given a nice buy signal to buy mode. Price has gone well. MACD hasn't crossed positive to confirm the buy mode. So this says be careful because you could get a failure So this is the pattern I would automatically draw. If I was trading this and I was long, I'd say, hey, easy. Just make your stop around about 250, so 259. Make your stop at about 257.25. If it takes that out, you don't really want any part of it, and just keep raising it. And if it gets to 261, keep raising your stop and be careful, because that's the area that it can start to make the H formation as it reverses. Now, can I make a V-shaped pattern? What would be the case? Yeah, sure you can. And it would be like this. I'd go left side, right from there to there. And you're running out of time, but you could still do it. And that says you've got until, there you are, you've got until 11:20 to get to 267, 268, 2067, 2068 on the E-mini. I think this is the pattern that will prevail. We'll see. Okay, so let's get out of this and do a quick review as we're about to break. And then we're going to go to my show, the Tiger Technicians Hour. Here we go. The Dow is at INDU. We could do the S&P, but I'll do the Dow. The Dow is at 17,681. At this particular point, the most important aspect of this particular chart is that the MACD is flattening, but it hasn't turned up, and the stochastic's only at 26%. That is not good enough. That resistance, see that dashed line there? That resistance here says we can be looking at an M pattern, another M pattern right there, and that says 17,007. I don't even know if it can get there. 17,720s is going to be the area. If it can get there, hold, and then start even push a little bit higher, then you'll have a very strong close. What am I anticipating? I'm anticipating this rally could last another day into Friday, maybe even into Monday or Tuesday, and then we start coming down. Next week, we start to see the arch formation once again. Thanks for being here. Sitting in for Tom O'Brien. This is Basil Chapman. This is, of course, the Money Masters. I'll be doing my Tiger Technician show right after this. Stay tuned if you can. I'd love to have you. And call in at 877-927-6648.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.